Welcome back to my morning report chart analysis videos on Tuesday 6th of September with me, Richard Perry, market analyst at Hantec Markets, looking at sterling dollar now. And we're seeing this continued creep higher. The run higher is not as strong as it was, certainly in the middle of last week with that big strong candle, but you're still getting this creep higher. I don't think it's excessively sort of bullish though. I think it's more of the fact that we're now sort of get rid of that downtrend. I think we're sort of now in more of a range play really. So you sort of draw in your sort of overhead resistance lines. 3470 is the one from sort of mid-July. 3470 if I can get it right, around about there. And it sort of certainly is looking as though it's sort of creeping higher, but I think creeping is the more of the opposite operative word really. And the fact is that I don't necessarily think it's going to be breaking strongly higher, because I think the candles in the last few days have been sort of wishy-washy. I mean, yes, you had that candle yesterday with Labour Day, very mild sterling strength. Will it continue? I think it's sort of going to be pulling up towards these sort of resistance levels and then start to peter out, because you've got the resistance overhead sort of 3380, which was this day high. 3370, sorry, 3370. I don't necessarily think it's going to be coming in for too much further on the upside. I think you could start to see the bulls struggling. You've got the RSI up around sort of 60 now, not too far off 60. MACD lines back towards neutral. Stochastics into sort of positive territory, but again, not really shooting the lights out, not really sort of bursting higher. They're starting to sort of roll over a bit. So I think the suggestion is that the market is positive, but is to a certain extent sort of running out a little bit of steam. It'll be interesting to see what happens here now. As I said yesterday, 3250 is a key support. This is the hourly chart. That was sort of the breakout support, wasn't it? You pulled back into that level, and then just prior to the payrolls report, you sort of strongly higher. It's now sort of a level at which you'd argue it would be a top pattern if it broke to the downside. You've got these momentum indicators which have been sort of unwinding really, rather than sort of negatively diverging. I think it's sort of more of an unwinding move. 45 on the hourly RSI looks to be a bit of a level now, doesn't it? Certainly has been for the past week. MACD lines, if they start to sort of go below neutral, maybe that would again be a bit of a signal. But for now, I think we're still creeping positively, but I don't necessarily think there's too much further upside potential. As I said, 3375 is the initial resistance, and then beyond that you're looking at 3470, which is this sort of mid-July high. But again, I sort of stress this, I don't necessarily think sterling's got too much further on the upside. I mean, there'll be a bit of volatility on this ISM non-manufacturing data today, and that could drive a bit of movement. But it'll be very interesting to see if that run higher can continue in any strength, because at the moment the strength is not all that positive. It needs to have a renewed impetus. Maybe ISM non-manufacturing, if it came in disappointingly again, would give you that impetus. But at the moment we're sort of fairly sort of drifting higher on this rather than bursting higher on cable. But we are still running gains, but that key support at 3250, initially 3285 is the level you need to look out for. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.